Hey guys, welcome back. It's Alon here, and this is another weekly update of AcornProductions. This is our joint portfolio. Probably a lot of you guys watching here will be either our followers or our copiers. So welcome on this journey that we're taking together. We're trying to outperform the market every year, trying to get at least 20 to 40% a year, which is quite a lofty goal. So it's going to be more. We're going to be more tested during the bad times than the good times, and at the moment this is it's honestly a good market. It's kind of hard to lose money, so we're trying to make the most of it. But we could be looking at a bad market sometime in the future, but no one can predict. So the topic of this video is going to be about our rebalance. So up until quite recently, we've been sitting on quite a lot of cash. So I want to show you guys why. So a lot of last month, so we're in April now, a lot of March was really, we weren't doing too much, you know. What's happened this month, we've bought in with almost 50% of our portfolio. So we've stopped sitting on the sidelines. We do have a bit of cash at the moment, but we've stopped sitting a bit on the sidelines. We've invested. We haven't fully invested because I think some of the riskier stuff that I want to buy, you know, crypto, things along those lines, specifically crypto, I think it might be a turbulent month or month and a half. So I've left a bit of money on the sidelines to keep buying in when I believe it will go down. But I think it will have a very good rest of the year following. But I'm not 100% sure. I don't know which way the market's going to go, up or down, but I have a feeling that it's going to be a volatile month with the Bitcoin halving. So that's why I wanted to keep a bit on the sidelines. But I also didn't want to be like not invested, because that's essentially where I was in March, and for all I know things are going to keep booming. So I do want to be invested. At the end of the day, the strategy is to be mostly fully invested all the time. You know, it's not like a timing the market sort of strategy. That's not how our strategy works. I do intend to post a video about what our strategy is, because I haven't talked about it. I don't know if I've even talked about it this year. You know, it might have only been something that I talked about last year. But essentially, what I want to show you guys is what I've been trying to do the last month. So this is essentially eToro's little chart of where you would be if you invested essentially 10K with me at the start of 2023. Now, this is essentially the pattern so far of what our strategy is doing. And what you can see quite recently, specifically in the month of March, I was trying to stop this drawback that every time we have a few good months, you know, 2-3 good months, a good month, good month, there's a little drawback at the end. So you can see that for now I've managed to curve this drawback. You know, maybe it would have gone a little bit higher, but I'm trying to curve the volatility, try and make this a little bit of a smoother process on the way up, because I think the more and more money is invested, the more volatility is important. You know, nobody likes to see red, at least not for long amounts of time or these deep spikes. So that's what I'm trying to curve off here. Now we might come a little bit down, but I'm really trying to reduce the volatility. So we've done well recently. At the moment we have a risk score of 3, but we're already back up to 4, you know. But you know, we did just reinvest and crypto went down just a little bit over the past few days. So we'll see what happens. But I do want to keep my risk score a little bit lower. So that is something that's important to me. Now let's talk about what we did. Sorry for rambling on here. We have now 15 holdings. We're probably not going to have more holdings. Well, not for the next 2 months anyway. So we're down from 20. We've had 20 in the past. Now, we're going to quickly recap for those that do know about our strategy. We've got 4 different parts of the portfolio. We've got our chest. The chest is the main part of our portfolio. We've got our reserves. This is the safer part of our portfolio. We've got our horns, which are essentially the high risk part of our portfolio that try to get the excess sort of returns. So Tesla is part of our chest here, one of our biggest losers at the moment. But I do believe this will come back. So you can see we've invested about 20% of our portfolio, and it's only at about 15. So it's been lacking at the moment. It went down. That's unfortunate. I bought it when it was a little bit higher. And another part of our, let's have a look. Another part of our chest is Berkshire Hathaway, which is a very good performer. So that's a big part of our chest. Then we've got Microsoft and Apple. Where's Apple? So essentially the chest is going to do the main lifting for our portfolio. It's 40% of our portfolio, and the goal of the chest is, it's very simple. It's just to outperform the market. So I'm holding 4 of the wonderful 7 companies. I did used to hold the other ones. The only one that I don't hold from the wonderful 7 is Nvidia. We've already held Nvidia. We've already doubled our money on Nvidia. I don't really want to keep holding Nvidia. I think it's too high already, but it might continue to go up. It's similar to MicroStrategies for me, but the goal of the chest is to outperform the market. I used to just hold the market, the S&P 500, all of those things, but I realized that if I want to get 20 to 40% for you guys, I'm not going to do that while I'm holding the market. It was putting too much pressure on the high risk parts of our portfolio really overperforming to hit our goal of 20 to 40%. So I really need the core part of our portfolio performing. Now, Tesla as our biggest holding isn't doing so well at the moment, but I have back tested these companies specifically, and they do perform at like 40-50% a year on average for the past many years. So they just got to really keep going on track to what they've been doing in the past. Nobody knows what's going to happen in the future, but we got to sort of take a shot at it. So that's what I've changed since I started this strategy with the chest. So with this strategy, it's essentially just different components with different roles. So I may sometimes every 2 months, like I'm showing you guys now, change the individual part of each of these strategies. But essentially the chest's main goal is to be the structure of the portfolio, the main strategy, what we're going to do to beat the market in that way. Now reserves is probably going to underperform the market. Reserves is really just there to help protect our portfolio from downturns. So at the moment I've decided in the reserves that I want a bit of Bitcoin. I think it's unfortunate because we're buying Bitcoin at an expensive price. We've done very well on Bitcoin in the past, if you guys didn't know, but it is a bit expensive now. But I think Bitcoin will be a great hedge for when the markets go down. It should bounce back up in my opinion. And now we've also increased our position in gold and silver. So we've got gold and silver. They're actually doing quite well. So those are just essentially it's a cheaper way to hold this. It doesn't have fees on eToro. This is a kind of like a company that holds it for you, like a trust. So the reserves will chop and change a bit. I used to have bonds in my reserves, but I'm not a huge fan on bonds. I've realized this is not an income portfolio. The dividends is probably something that we can go to another portfolio for. This portfolio is specifically for growth. Now horns, so this is where we take a risk. We have a new sort of crypto horn. We were really focused on Bitcoin and Ethereum before. We still have those, but now we're entering a new season with cryptocurrency. So we have remember, we haven't fully invested into these yet. I've still got about 20% of all of our money waiting on the sidelines to buy more of these. We've half invested as of right now, so these will double. So if this is at 2.5%, this is going to be 5% soon, but we're going to buy in as it dips. We've got Algorand. We've got XRP. This is a new addition. This coin is in anyway, we won't go too much into it, but these are essentially, we've got DOT, so we've had that before. We dropped Matic, and we've got ADA as well. This is a very popular coin. These are essentially 4 smaller cryptos that are now 10% of our portfolio, but they will be 20% of our portfolio. These are essentially smaller cryptos that I believe are going to benefit much more than Ethereum and Bitcoin in the next bull market, which is what we're about to experience over the next few months. So I'm excited for these. I think these will do very well, and these could be a big part of our profits this year to take us on track. Now with the second horn, this is typically more companies. This is where we had MicroStrategy's, Coinbase, all of those in the past. Those companies are a little bit too expensive for me at the moment. So at the moment we've got Meta, so Facebook. We've increased our position. That's 4%. That's been doing great this year. Amazon, feel very confident with that. That's also 4%. And then we've also got Google. So these are, so that's not Google. We've got Google over here. So Google's probably one of the cheapest companies in the fabulous 7 stocks that are lifting up the S&P 500. But I'm really happy for all of these. And we've also got Ethereum, which surprisingly is one of our losers now, but won't stay this way for long. That'll eventually be just a little part of that portfolio as well. So at the moment, our portfolio doesn't have right now, but it will have close to 40% crypto for this year. It's not gonna always be this way. It's not gonna always be this exposed to crypto. It might not even have crypto next year, but this should be, it comes every 4 years. This should be, this year in specific should be a very good time for crypto. Obviously this is not financial advice, but historically it always has been. So Bitcoin goes up first. We've experienced that. We've more than doubled our money on Bitcoin, and a wave of money should now come to the other coins, and Ethereum should have a very good year as well, because it's going to have ETFs and stuff. But now it's a little bit murky water, because this is the month where the halving happens for Bitcoin. So tensions are high, people are expecting a drawback, things have been going to the moon, the greed's been going up, but essentially we should have action now. So this should be a choppy month. We're going to use it to buy in more, and then we're going to be fully invested soon, and we're going to ride this wave out, making small changes towards the end of the year. But essentially guys, the strategy is quite simple. We have, essentially it's a bull. So the strategy, it's an old military strategy, but essentially the bull has 2 horns. The 2 horns do the damage, but then the chest is also what supports everything. And then we got the reserves. So the reserves are there just to back up everything else. So how it's used in like a military battle is your horns will flank around your enemy, the chest will confront them head on, and then the reserves will back up whatever's missing. So what we're going to do in this portfolio is basically take your investment and my investment, and we're going to split it into those 4 sections. 2 risky sections that focus on different things, the main investment that focuses on beating the market, and then actually a portion of the portfolio that doesn't try to beat the market, just tries to alleviate risk. So that's sort of how it works. I will make a video about that soon, possibly today. And it's been a pleasure, guys. I think it's been a bit of a longer one, but we've resettled this portfolio. As always, I'm proud of this portfolio. It's got most of my money, a lot of my family's money here, a lot of your money too, and I don't take that lightly. I really like that responsibility. These videos keep me humble, they keep me honest, they keep me on track, and I look forward to having a really good year with you guys. Thank you for tuning in. If you made it this far, I'm surprised, that I didn't bore you. Thank you very much, and I'll see you next time.